You guys know the name Charlie Munger?
Yes, sure do.
He said that we saw 40 years of declining interest rates. They anticipate to see 40 years of increasing interest rates. I had a clip of that on YouTube. I go to that clip now and it's taken down. You can't access that clip anymore. I have spent about 6 hours of going through every edited version of that interview, and it's no longer in there.
Even your mortgage professionals, for the most part, with the exception of you, Aaron, are talking about refinancing. And correct me if I'm wrong, but they're getting paid to refinance you as well. Yes?
100%. That's why they're talking about it. That is their career path. So very, very recently, there's a lot of people in the mortgage industry that are saying, well, why don't you just take an ARM loan because you get a lower interest rate and then refinance when the rates go down? Well, what I'm explaining to everybody, because I had a big run for about a year there after probably about 6 months. Everybody's saying, can you guys do an ARM? Everybody says I should do an ARM. It's like, why do you think they're saying that? Well, they say, because I can refinance in 5 years. Well, one, you're just setting yourself up to be their future business. And that's exactly what all the leaders in the industry are saying. Sell the ARMs so you have future business, right? Keep track of those clients and market to them in a few years. So that's their future business model and business plan. Secondly, who says the rates are going down?
That's right.
Yeah.
You guys know the name Charlie Munger?
Yes, sure do.
So he was on I think it was CNBC or MSNBC. I can't remember which one. I think it was Christy Quick that he was being interviewed by. And in that interview, it was earlier this year, he said that we saw 40 years of declining interest rates. They anticipate to see 40 years of increasing interest rates. I had a clip of that on YouTube. I go to that clip now and it's taken down. You can't access that clip anymore. I have spent about 6 hours of going through every edited version of that interview, and it's no longer in there. What's also interesting, I downloaded the interview, what I believe is the interview, and it's been redacted from the transcripts. I can't find it. Why do you think they can't find it? Because they don't want people to know that we could be on a 40-year increase of interest rates. So you don't lock it in now. You wait till the next thing. Now, there's so many people sitting here waiting. Well, I'm just going to wait till the rates go down because say the rates go down. Well, okay, let's say they do. What do you think house prices are going to do?
They're going to still go up.
Yep, going to keep going up.
Jump, right?
Yep.
It's amazing how many realtors I talk to or I've heard from. It's like, you banks and the damn rates, and they're bitching at us like it's us, right? It's like, well, what about you damn realtors that would tell your client when they want to buy a house that you better come to the table 30 to 50,000 over list just to get in the game? Nobody bitched about raising prices 30 to 50,000 because interest rates were 2.5%. You gave away the benefit of the interest rate in the price of the house.
Yep.
So now we're at an equilibrium where the price of housing is kind of semi-stagnated. They really have an 8.9% increase, but there's some areas that actually have come down a little bit. I'm telling people, you better lock in the price now, because if you're right, let's say Aaron Chapman's wrong and the interest rates do go down, you better have locked it in now because you're going to get screwed hard. And what's really interesting is even though the rates are going up, the cost of housing is not going down. Why is it not going down? What are the hedge funds doing? They're buying the hell out of it. You got BlackRock, you've got Vanguard and State Street are anticipated. This is anticipation. I don't have all the statistics on this. This is anticipation for them to control 60+% of the available single family housing by 2030 to 2035. If they do that, they will have accomplished turning us into a subscription-based economy for the next few generations. Our generation will make it through, but what about our grandkids? I've got a grandkid here at my house today. I've been watching her most of the morning. She's not going to have a shot at this if we don't do something now. You want to talk about freedom family investments? The freedom for the family should be buying investment real estate now, because it's not going to be available later. I just closed on 2 houses in Missouri because I have 2 kids moving out there, both like 5-bedroom homes for a couple $100,000. Our family trust paid cash. I put liens on it. I'm going to refinance, pull the cash back out of it, put it back in my accounts to keep expanding our holdings. But that's the only way they got a shot at this, is to rent from the trust. And then the trust is going to keep growing it and keep growing it for the future generations. Because if we don't do that, they're going to be taken advantage of. And it's my opinion, again, my opinion, because I don't know the future, if we're not doing this now, we're going to end up being the ones paying the subscriptions, not offering the subscriptions.
That's right. That's right. Wow. That's so powerful.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions and information on the show are not guaranteed. All investment strategies have the potential for profit or loss.